Hello, fellow traders. Marv Eisen here from Timeless Dollar Trading Academy. I want to point out a trade that I've spoken about many times before. The setup is so visual and it's such a perfect setup, and it's good for 30 or more points that I'm going to point it out to you. But before I do, I'm going to show you the prices as they lead up to that fantastic trade setup. And I'm going to start on Friday, October 10th, when President Trump announced the increase in Chinese tariffs, and so the market immediately moved down in a momentum move, all right? Now, just look at and this is a 3-minute chart, look at the first 6 minutes. There are 20 points between each horizontal line on this chart, 20 points. So we're talking about significant points. So let's see. From 67.96 thereabouts down to 67.23. All right, so about 73 points. All right, huge move in 6 minutes, and then the market stabilized. Now I want to point out that one of the 6 trade setups that I teach at Timeless Dollar Trading Academy is the time and price trade. And this is a time and price trade, but it's not typical of the time and price trade. But I just want to point it out before going into that trade setup, that sweet trade setup that I want to point out to you today. And so the time and price trade, there are 2 legs. The first leg is where the market moves for a certain distance, for a certain amount of time, stabilizes, and then moves in the same direction for the same amount of time, about the same distance. And the trade is the second leg. So here's the first leg, okay? Here's the first leg. Here's the stabilization. Again, 3-minute chart. So there's about 15, 18 minutes between the first leg and the second leg. And then the market moved down the second leg, and notice the second leg is about the same distance as the first leg. The trade is the second leg. All right, so time and price trade. Difficult to anticipate, especially when the move is so vast as it was on Friday, October 10th. And so before moving on, I just want to point out something to you guys right over here. Here's the 1600 hour, all right, 4:30, when the market closes. The regular hours, okay, regular hours, not extended hours. And so the market closed right about here at 65.94, all right? And so the market, this is where I mark my previous chart, my next chart rather, with the previous day's close. And here's my next chart, and here's the previous day's close, 65.94, okay, 65.94. It's about exactly where it closed on Friday, October 10th. And so I mark 65.94 on my chart. Monday, October 13th. October 13th was Columbus Day. It was a federal holiday, but it's one of those few federal holidays where the market actually does trade. And so the market opened about in the middle of the trading zone, didn't come close to the close on Friday, October 10th, and the market stayed in a very narrow range. And as I've said so many times before, if the market opens in the middle of the trading range, you might want to sit that day out, because the market could go up, the market could go down, and of course, that might sound so obvious, but the fact of the matter is that the trading zone is an area where the prices may trade. And so the market basically stabilized on Monday, October 13th. But nevertheless, here was the gap from Friday, October 10th. This was the gap down here. Now, I'm going to move over to Tuesday, October 14th. And I'm going to keep my cursor right where it is. And notice right over here, the market came down and actually closed the gap from October 10th. Gaps always close, not necessarily the next day, but they always close. Here's the proof, all right? Now, back to the setup that I tell you is such a sweet setup. And this happens so many times. And right here, the prices open right at the support at the bottom of the calculated trading zone, faded the trading zone, that is, moved against it. And in this case, they closed the gap from October 10th, but then look where they went. And I talk about this so many times. when the market fades the trading zone and is opening at the bottom of the trading zone or even at the top of the trading zone, fades it by going up and then moves down. In this case, it faded the trading zone by moving down and then going up through the trading zone, stayed right at the calculated resistance, okay? And this is good. Let's see. There are 20 points again between each horizontal line on the chart. And if you have the trading zone, great tool, and you waited it out, you didn't trade on a day where the price is traded in the middle of the trading zone because you don't know which way it's going to go. Prices are never to be trifled with. We never know where prices are going to go. Nobody knows where prices are going to go. But Taylor's mathematical calculations are particularly accurate many, many days. So when prices trade at the bottom of the trading zone, fade it and then go up through it, or prices trade at the top of the trading zone, fade it and go down through it, these are trades that happen so many times. And look, it's good for 20, 40, 60, 80, almost 80 points, almost 80 points. And without hesitation, this is a great trade. When the price is open below or above the trading zone, briefly fade it and then move down or up through it. So that's my video for today. Watch for this setup. Doesn't happen that often. There are only 3 or 4 good trade setups a week. Remember that, a week, unless you're a scalp trader, where you're going to go in and out of the market 15, 20 times a day, which I don't teach and I don't recommend. Unfortunately, that's the way most traders start. I started that way. Lost a lot of money when I started trading. Oh my God, I lost a point. I got to sell. That's over 20 years ago. But now I'm much more experienced. I want to impart that experience to you. Learn the 6 trade setups: gap, support and resistance, trend, time and price, momentum and candlestick. Use the Taylor trading zone. Use the stochastic. Some people like the relative strength index. There are other indicators, over 200 indicators. How much do you want to mess up your chart? And so I only use the Taylor trading zone, previous day's close, and the stochastic. Sometimes I just trade with the stochastic. But I like the big play trades that are dictated by the Taylor trading zone. So that's my video for today. I made a video the other day using some AI avatars. I'm just playing around with that, and some of my viewers made a comment, "Hey, what happened to you, Marv? Relax, don't worry, I'm here, I'm back." And I love talking to you guys. I'm very, very pleased when I get your comments. Thanks so much for watching Trade Safely. If this is the first time you're watching my videos, I hope you subscribe. I try to be as succinct as I can and informative as I can. So thanks again for watching Trade Safely. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.